Welcome to Align Trading. Today I'm going to be going over a video on how to identify liquidity zones the correct way. You might not technically understand how to see liquidity, and I'm going to show you how to identify it and use it with my head and shoulder or inverse head and shoulder entry style that I use to trade with. So first things first, we have the chart right here, and there's a couple structures that we see forming off the open. We see this inverse cup right here. It's forming this liquidity right there. And then we see it once again forming that. So we have that going on with this algorithm right here. If we were controlled, right, to go up like a flag, but we did not, and instead what we got was this right here. We have this head, shoulder, and other shoulder with a micro shoulder right there for the entry, and this was actually a trade that I took on the day I'm recording this. You can see the liquidity level right here as well as right here. So when we form this, that is an entry to sweep this level right here, and you get the sweep down to this level right here before we create more liquidity within this algorithm right here. And once again, we get this micro head and shoulder entry. And if I go ahead and put my indicator on it, you see we get the sell signal here, we get the sell signal there, and we get the sell signal here, as well as here. It is on these head and shoulder entries right here. As you can see, where the liquidity builds on the shoulder, it sweeps it. And same thing to the buy side right here. You have the inverse head and shoulder. We get the move up. Once again, you have that inverse head and shoulder, and we continue up in this buying channel. The reason we were able to have this move like that through that level so quickly at this pink is because of all of the liquidity that we had been creating here. We used this as a fake breakdown. We create that double bottom with this inverse head and shoulder right here, as well as the cup. You see this handle, and then we have that buying continuation once again. So now without all the drawings, once again, you can see when it creates liquidity, you will be able to have quick moves to the opposite side. We have this move up right here that created liquidity. Again, you get the move up, it fails to break higher, you see the breakdown, and it sweeps this level right here for a nice move down. You could have taken it off of this right here on the shoulder, or you could have taken it for a breakdown like that. Liquidity I've been showing you is a little bit smaller liquidity zones. If you look at bigger liquidity zones, you can see a larger picture for the larger move. So as you can see right here, we were creating this right here within all of this, which is liquidity, as we were beginning to curl this cup right here to this level right here, where again there is more liquidity. So now on the larger time frame here on the 30-minute chart, I'm going to show you how the liquidity works the same way. So you can see we have this liquidity right here that had been chopping before we get this head and shoulder breakdown right there with this inverse cup, and you see the move down like that for the sweep. Now when we started forming this right here and this cup and handle, we get this move very quickly back through all of this liquidity. It is very easy to go through the liquidity when it is chopped like that and form that nice level, and you get the structure right here to move and do that. So same thing here, we have this liquidity level right there. If we want to, we can go like this and make our move through that very easily. Without knowing what's going to happen next, How I would be looking at this for the downside is we can see that we have been forming liquidity at this level right here. So what I will look for is if we start to close that right there with maybe a handle, and then we get this breakdown and move down for liquidity to sweep to this level right here, forming the perfect symmetrical inverse head and shoulder before we go back up. Going back to the 1 minute chart now to look at another example, as you can see right here, we form liquidity with this tapering algorithm, and it begins to taper once again with this green algorithm right here, which gives us that liquidity at this level right here, and then we are able to get the move through it, which ends up sweeping it before we go like that and form the same algorithm, giving us once again that same sweep through all of the liquidity for the move lower. These are primarily the moves that I try to trade, are these downside liquidity moves. They are some of my favorites. The response time of these moves with 0-day contracts is very lucrative as well. They move very nicely, very fast, and often get a nice boost. Again, you can see right here we have liquidity and we get the sweep through it. Again, we make some liquidity right here. We start to make some here until we get the sweep through it once again. So you just have to identify these pockets right here. You can see once again with that same algorithm forming the liquidity before we get this. Even on the daily chart, you can identify liquidity as well. So you can see right here we are forming that same inverse cup and handle. The liquidity is all within this level right here, and we start to break down until we get that sweep through the liquidity, which happens very quickly. Look how long it took to move this far up versus that same amount of time to move down. It was 5 or 6 days versus a month that it took to move within that same liquidity zone is able to be swept. The same thing could happen for this level right here down to this level if it wanted to break down again and sweep that level at 490 can happen very quickly, just as we can move up through this liquidity right here, because it took a significant amount of days forming the liquidity. And if we want to grab that liquidity through the moving average like that above it, we can do that once we regain this 20-day. You can understand this concept. I go over it in my lessons playlist, but you can start to understand how the trend can help you see the longer term liquidity on the daily chart. This can be used for other stocks as well. All stocks have liquidity, and if you can see their liquidity levels, this will help you be able to make better trades, hold your trades longer, possibly even cut your losses easier because you understand that your liquidity zone is not working out and you did in fact make the wrong trade. As I was mentioning, how identifying the liquidity and using the structure can help you with your losses. Not only can it save you from a loss, but it can help you from a large loss or a loss that you don't want to take in such momentum like this round right here. If you were short and you got this breakdown through this level right here, as you can see, and we form something like that and we regain it with a large candle like that, you should be out of the trade there because you know with this liquidity it can move up very easily through it, even if it is just to this level right here. So say you entered, the trade at up here and your stops is up here. That is okay because right here you're stopped out, but you need to be able to understand if you are in down here that you need to be out through that move because of this liquidity, and it can move back up to this level right here even, but we actually got the move all the way back up. Thank you everyone for watching. Be sure to subscribe and become a member if you who are interested in the live analysis and learning more. Thank you.